Welcome to another interesting topic right here where we will be using this 90% of the time. And previous topics you have learned about a single candlestick, a bullish candlestick. And this is where we could combine a few candlesticks to actually gauge some of the sentiment of the chart or a single stock. So I'm not always using this alone, and I would usually combine this with some of the fundamentals. So to increase the odds of winning. All right. So let's go deep dive into it. And of course, we have a lot of names here to remember, right? But don't worry. And if we count that, and you could even take a snapshot, this could be a wallpaper. And there are so many combinations here just for the bullish family of these candlesticks right here. Of course, the most I would say the most common one we know would be hammer. And from the previous topics, we always have been learning about pin bar, bullish pin bar, and bullish ice cream. So not to worry too much about all these names here, double marubuzo, inverted hammer, and even the ones with long names here called three river bottom or three river unique bottom, three inside up, three stars in the south. It all sounds too fancy, right? But not to worry about that. So let's dissect some of these candlesticks and how they work, what are the dynamics. So, okay, all together right here, you could see the ones that are quite easy to remember on the patterns would be 27. Then the one on the 28, it's a little bit slightly hard to remember because it has some variances as well. And this is not to be mistaken with one black coral, okay, which is a reversal candle, bearish reversal candle. So all these are bullish candles. And so this is called considered an advanced candlestick analysis. And let's look at the one of these example right here. If you have a series of a bearish candle and suddenly there's a candle that comes into place where we call hammer pin bar, is because there's a lot of buy limit orders right here that triggered the reversal. All right, so now this is very common. This is what we have learned on the previous topics. And this is where we want to learn different type of candlesticks combination. And this is what we would call piercing pattern. All right, and it's a strong reversal candle. So how do we actually look at this? So when we look at the piercing pattern, the green candle has to be around 50% above the bearish candle on the left hand side, right? So the closing, it has to gap down, then it has to close above 50% of the bearish candle. So if we look at the synthetics of this, and if you combine these two candles, what would you get as a result? So then let's say for this, the opening of this candle, all right? So the opening of this candle is on top of here, and it goes down all the way and closes here, right? So then the next day it starts to open this at this low, then the candle goes all the way up there and ends up closing higher. And now what you can see here is that this is, if you combine these two, it's a regular bullish pin bar. And remember from the last topic, this is at least, this can be 70% or more on the shadow. All right. So now this is what we should remember because most of the, you can see 26 of the combination of the candlesticks, they all lead back to either bearish pin bar or, sorry, a bullish pin bar or a bullish ice cream. So now let's go. All right, so there are some animations here that I didn't I didn't mention this now, but yep, pretty understandable. And let's go to, okay, this is what we call bullish kicker. The price opens on the left hand side here and gaps down. Sorry, not gaps down, it goes down. Then the next day when it opens, it gaps up, right? And it closes high. So this is what it looks like. That's the first day. Then the second day, it gaps up and closes above. And this is where we can see, we can see that this is a bullish ice cream bar that has formed. All right, so here are the two examples that we see. And if you all put all these together, these are very common and okay. So like if it's a bullish engulfing, it has to gap down, all right? And the range of this candle has to actually be bigger than the candle previously. So it means that this whole entire body of this candle engulfs the bearish candle, the previous bearish candle. All right, so the name is also very understandable right here. And if we go to the next one, okay, bullish meeting lines. And this is actually also very strong. And I like this pattern right here because whenever there's a gap down, and if it's a sharp one, the next day, so a lot of people will be panicking. And there's a lot of sell off here, and the smart money would actually start to pick up a lot of stocks right here at this area. So it closes, it rejects all the bear, and it closes right on top here, almost the same as the low of the previous day. Like, okay, this is what we described earlier, bullish kicker. So the first thing is that when the candle reaches down below, then there's a lot of buy orders here. Then the next day it gaps up immediately, and this is most probably right here in the extended hours that the candles has already start moving upwards before the regular market hours open. All right here. So that we can't see here in the chart, but most of the time when this happens is that during the extended hours before market open or after the market close on this day itself, this candle, then there's a price movement going upwards a lot. So the next day, the bull is in control, and this is very likely to go up. So, and on the right hand side, this is also very common. Sometimes you can see that there's a huge gap down. The color doesn't matter for this one. That's why you can see one is green and the other is red. Doesn't matter. Or even it could be a small doji right here, right? Doesn't really matter. Then the next day it gaps up and closes above. Then the probability to go up from this pattern onwards is very high. So now again, we can have one white soldier is also slightly a bit like a bullish kicker. It gaps up and then it closes way above the high of this candle right here. Right, gaps up, then starts around 50% of the bearish candle body, then closes right above here. All right, way higher, maybe about 30% higher. Then now on the right hand side, where you can see also on this middle part, we call it double barabuzo. And if you combine these two candles, if you combine them, you would see something like this. It's also a bullish pin bar, but with a shadow about 90% or more right here. So there's a huge rejection right here because of a lot of panic. Right. So now on the right hand side is also where the bears they attempt to bring the price down. All right, but it couldn't bring any lower, and the price is just like stop over there. It's like a hammer that is resting on the floor, upside down hammer, right? So the next thing is when it gaps up the next day, then the bull starts to take control. All right. So now there's so many names right here, and you're starting to like you feel overwhelmed right now. But what we need to remember right here is at the end of the day, if you combine this group of candles, you would always see a V shape and it ends up as a hammer. Most of the time, it ends up as a hammer. So price starts over here. See, it goes down, gets rejected, comes up and close over here. All right, you have opening, then you have low, then you have the high and the closing price here together. All right, which you have learned that in the basics. So now try not to get overwhelmed with all the names here. Don't get intimidated. And what we always need to remember is doesn't matter what kind of fancy names you have here. It all ends up as hammer, right? Then sometimes you might have some consolidation right here, but as long as the candle closes right above this resistance right here, then it goes up from there. All right, but of course, all these candles, I usually want to combine that with strong fundamental stocks, and that I will cover in the topics later part, and you would see why. And also, it depends on which part of the chart this is. All right, so okay, now, and these are not just reversals; these are some. What we can say here is there's a combination of this is like a continuation, right? Rising tree method and a bullish method. They what they have here is there's a strong impulse rally, then the price comes resting, so it forms a few doji like a 3 days for this one. You can see that it's in even like 15-minute or 30-minute charts. You can always see that this is quite I would say quite common, but it appears quite occasionally. All right. Then the next candle it forms a bullish candle, which is way above all these three candles, closes above. There's commitment from the bullish players, then price is likely to go up. All right. So now bullish method and bullish rising tree method they are almost the same. It's just that bullish method you might have a small gap right here, and then it starts to consolidate a little bit, then it gaps up a little, then it starts to form a huge, not say huge, a regular bullish body, then it starts continuing the trend. So on the left hand side, where we call three line strikes, is actually one of my favorite pattern. But as soon as this forms, the trend could continue to go up sideways, or it could go sideways, and at times it could even go lower. Then it forms another three line strike. All right. This is actually this big red candle right here. It's a candle that is used to shake out weak hands. And the longer it is, the more people will see it as bearish engulfing, which actually I did not cover here. Bearish engulfing candle. All right. So a lot of people mistaken this three line strike as a bearish engulfing candle. Once you see this, and there's a lot of combination of this kind of patterns, it occurs in the chart a few times, then it tells us that the smart money is trying to accumulate by scaring away the weak hands. All right, it could go lower even from this place onward here. Right, my favorite pattern, right? So now there's also another fancy name here, upside Tasuki gap. Right, so this is the first, the origin of it would be this combination right here. So it gaps up, then there's profit taking in this candle. This candle is more like profit taking, and then the next day onwards you might have a candle that closes above these two candles, right, which the trend will continue. So this is for stocks that usually when you see this it's like for me, if this happens it's actually breaking out from a very very significant resistance. All right, so like a chart pattern, if it has something like this that has consolidated for a long time, and if a green candle breaks out here, then you might have a red candle on the following day. Then it's more like profit taking, or it starts to rest at this area and retest before it starts to continue. All right, so this is like a very determined momentum trigger that breaks out from a strong resistance, then it starts to continue to go upwards. But of course, this is just one part. You might want to see this in action of entire price structure. So we'll go into that some of the examples. Right. So now the upside Tasuki gap, it's not to be mistaken with one black crow because it looks slightly the same because this one has gap right here. If we define this properly, how we characterize this is that, well, now let's name this candle number one. Then the second day, the day after, then you have a huge gap. Of course, normally I would want to see it breaking a resistance. Sometimes we call this runaway gap right here. Some stocks after earnings this day, on the earnings, then you have gap up, then a lot of people, maybe they start to take profit. And when as the price goes lower, then a lot of bulls they come in, then it starts to bring the price upwards. All right. So now But if it's one black row, I would prefer to see a huge bullish candle right here, a flush up candle, we call this, where it's usually used to induce euphoria, right? Euphoria, which means people start jumping in when they see huge candle and they want to change the momentum. And with one black row, it's actually this is the opposite of piercing pattern. One black row, it actually starts before the 50% of this candle opening, then it closes below the low of this green candle right here, right? So the next day, if it starts and come up and retest, and this is where you could sell, right? But this is very much could be actually mistaken for upside Tasuki gap. All right, it also depends on where the chart is. All right, so I mean where this candle is in the chart. So it is like somewhere in the chart like this, after some parabolic move, and then it does another top with this flush up candle right here, and then this is where I'm going to get ready to short, or if I'm already in this stock, this is where I'll start to take profit. All right. So now here's some example right here. If we look at the chart, 40 net right here is a strong stock, and if we combine with some moving average right here, and the stock has been doing some flush out right here. All right, flush, shake out, then even itself right here, you have a doji right here. There's a lot of rejection. Very good combination here after, especially after a long red candle, a long red Marubozu candle. All right. Then you can see after that the buying pressure comes in. All right. This is actually what I call, which you learn later in the part. This is what I call bear trap. All right. So it traps a lot of short sellers, and the smart money comes in and buy at this part. So they always buy at almost the lowest point of the chart. All right. So right here, when we talk about bullish kicker, we always remember that the opening of this candle here, all right, the previous bearish candle is always gapping higher. So see, once it happens after that, then a lot of people see this as a very bullish signal, and there's a huge bounce right here, right, where a lot of people thinks that it closed below the red color line, 200 moving average. There are a lot of people panic and they sell here, but which means also the smart money on the contrarian side, they start to buy a lot. So maybe the after hours they just buy and it opens. And when the market regular hours opens, then you can see a green candle forming right here, or a bullish candle in this case, white color. Right. So then you can see small sustainable rally happening, and occasionally a healthy correction, a bear trap. Then it starts going upwards right here, and occasionally you start to see shakeout candles like this. We'll go into that a lot, all right, on the later part. Now, more examples. This is yeah, hammer is pretty much, I would say, pretty much common, and you can always find that even bouncing off some important moving average. And at times, in the moving averages, when the stock is very strong, it's always bouncing around 50 moving average, right? Daily, all right. So now okay, now you can see sometimes in the chart, you can see multiple of these candles have forming, right? You could, if you look at the clusters here, this cluster right here, there is a lot of bullish candlestick combinations right here. And even here, I missed it out. There's here it's actually what do you call that? All right, there's a lot of name, right? So you could call that inverted hammer. All right, so inverted hammer, then the next day onwards, the price starts to go up. And there's a lot when there's a lot of euphoria here, then the market makers or the smart money they start to push the price down again. So, all right, then yeah. So even you can see that this pattern right here is actually what I call a rounding bottom. All right, rounding bottom. And as it breaks out the rounding bottom, you can see it's very bullish. Then there's a shakeout right here, and then it forms another hammer or doji right here, long-legged doji. Then it forms clusters right here. Then again, it starts to go upwards. Okay, breaking the resistance right here. So here's also a very well defined resistance. Okay, now let's move on. Now, where I would usually like to buy in a chart. And a lot of people think that when the price is below the moving averages, they start to short the stock. And you can see why, because when these candlesticks, the price movement goes below, when it goes up to a certain significant moving average, it starts to bounce from there. But also, when it's below the moving areas, and if it's a strong fundamental stock, is also where I would like to accumulate my positions. And you can see when this is actually happening, and this chart pattern right here, we call it rounding bottom. All right. So what you can see right here, you can see that a lot of these combinations start happening. All right. You can see a lot of rejection, and you can see morning star, ladder bottom, bullish meeting line here. But remember, what I said about bullish meeting line is that it can also happen while it's breaking out significant resistance. So some place like this, see, breaking out right here. So this is also a bullish meeting line right here. Sorry, bullish kicker. Sorry, this is bullish kicker, right? It comes down here, closes here, and the next day it gaps up, right? So yeah, this is also a very strong combination which I missed out in this. I mean, I missed out in actually indicating right here, right in the chart. Okay, then again, here is also whenever there's a huge shakeout, it bounces on a strong resistance, then forms again long-legged doji. So of course, there's more patterns right here. You can see that there's bullish engulfing for this one. Then you have pin bar right here. Then of course, then it starts to trend up from there. Right. So now this candle, remember when I said this kind of candles, normally I don't use it as a combination alone, combined with strong fundamental stocks. And most of the time, 90% of the time, we'll be doing this. We'll be looking at this kind of patterns combined together with strong fundamental analysis and also strong, in actually the chart together with the chart pattern. And most of the time, when you look at this, this is actually this part here. When you draw a horizontal support line, this is actually where I call a bear trap, which temporarily is breaking out right here where a lot of people is trying to sell right here and smart money accumulated at this area. All right. So you see that happening quite a lot before reversal. Now, again here, this is also, I like bullish meeting lines very much because, you know, and again, if you draw a horizontal support line, this is this is like when it gaps down the other day, everybody's like panicking. Oh my God, I need to sell right here, right? So when they sell, most of the buy limit orders from the smart money, they'll pick it up from a low price, especially after it's beaten down from this all-time, I mean not all-time high, from the recent high, right? So that's quite a lot that has been beaten down and then even if it rallies, then it starts to be shaken out again. So forming another bear trap. So this is a bear trap, right? You'll see that quite often. And that is where also you might want to get ready to accumulate or buy over there. All right. So again, here bullish meeting lines, Facebook, strong stop. And this is where, again, this is a bear trap, temporary breaking downwards before it starts to continue the uptrend. And today, as we are speaking, it's already from this chart right here, which is 2020, right? So now we are not, we are just 1 year away. And then today it's about in August 2021, Facebook is already around $370 per share as compared to this chart right here. So super strong, right? Microsoft, another strong one, bullish meeting lines that you start to see trend upwards, right? Then alphabet. Okay, three white soldier is a little bit rare and not one of my favorite. All right, but sometimes this could actually form like something what we call a bearish flag. All right, before it starts to continue to go down. So it's very similar to that. So, but of course, if we actually see this pattern in a strong fundamental stock, it's likely to continue going upwards. All right, and also depends on where it is. This is actually a small bear trap right here, which is a very soft. Okay, we call this forced selling, which is the institutional money they actually they sell their shares and creating some panic right here. But this is a very soft one, which they just made a very shallow one before it starts to go up. All right, the ones in a deeper one, I would like to see something like this before it starts reversing. Right? So this is a very short week. All right, of course, I missed out some of these candles right here. Didn't name it in the chart. You can see there's a hammer right here, gaps down, hammer. Then the next day gaps up, wow, then it continues to move upwards. And then you can see a very strong resistance right here. So what I did was I just drew an average line right here and it broke out, right? And here is where you can say that there's there's a what you can say is a ascending triangle right here. Okay, again, okay, this is where like just now we did not see any moving averages. If we plot moving, okay, no moving averages. If we plot moving averages, we can see that it's bouncing off the important moving averages. So now when this kind of price they move below the moving averages, we can always say that it's in negative flow. So that most of the retail traders will see this as a shorting opportunity. And and most of the time in stronger stocks, the smart money will start to accumulate. And if they break above this kind of moving averages, they'll be regarded as going back to positive flow, and the rally starts to continue uh, in a normal fashion, right? They call it normal fashion because it's in positive flow. All right, but traders, when they see this, it's good to take momentum trades, all right, swing trades. But traders, they don't catch falling knives most of the time, all right? Or depending what they use, they could use options what they call back ratios to catch falling knives, but not to expand that in this topic. Right, again, Microsoft. Right, so now this is also very common. A lot of people they talk about the inside bar reversal, and of course, again, this has to happen depending on which chart area. And this is also when it forms a support right here, and this is where the price was also forced down quite a lot, and a lot of people were selling in panic right here, and the next day becomes very indecisive. It's like a pause here. Some people call it bullish harami. And if this candle is green color, it's even higher probability. But to me, it doesn't really matter because the color doesn't really matter. It's not significant to me. But what is more important, the next day is this candle. It gaps up and it forms right out of this box right here. So that you can see the trend starts to continue. So a lot of people, when they start to trade or invest, they always like to, once they buy, they want to see the price to go up immediately. You, I mean, very seldom I see investors. I mean, they often when they, okay, let's say they buy here, they see a bounce here, they buy here because this is a very strong bullish candle. I mean, you have a strong combination right here, isn't it? So okay, let's say this is line, then the price fails to go down. They see this as a bounce right here, then they might start buying here or here. They see strength over there. So when they start buying a lot, you can see that the price is actually forced downwards and even below this support. And with this huge red Marubozu candle, red body candle, and at that time they couldn't see this candle right here, right? So this is where a lot of people panic and they sell out here, traders or even investors. But this is the best time for market makers to, or smart money to accumulate right here. And then you can see a lot of people get squeezed, and this attracts of short sellers as well. They get squeezed out, and there's a huge impulse wave form after that. Then trend continues, three line strike right here. All right, you can see there's a, I missed out indicating that there's a something like a three line strike. It doesn't matter if it's more than three candles. It doesn't have to be three candles all the time. Could be four, could be five candles here. And suddenly you have one huge red candle shaking out weak hands before it starts to continue the trend. And again, you can see huge shakeout forms a bear trap, then it starts to continue. And after today, this chart was captured when, yeah, maybe around 2020, but right here today, Microsoft is a real of more than 200 US dollar per share. Right. So one white soldier, not very common, but also if you look at the chart pattern, this is something like a one white soldier has to be, if you look at this red candle here, this is a 50% of the body, and this has to open before 50% of the body and close above. All right, as long as it closes above here, then it's considered a one white soldier. But this candle has chosen to close above the significant support, and the price was forced down again right here. Then the next day, a bullish kicker forms right here. This is a combination of bullish kicker, which I miss out to indicate right here. All right, but does it really matter? Because I want to put your attention right here on this set of candle, which is quite rare. One white soldier forms right there. Then trend continues to go up. Then you have another bullish kicker right here. Gaps down, sorry, bullish meeting line right here. Bullish meeting lines. All right, so if your eyes are trained to see all these patterns, then you will likely to catch more opportunity while you're trading, or while you're even investing. You're picking up, every time it dips on the strong fundamental stocks, you start to pick up the stocks at these reversal candles right here. So do spend quite a number. I mean, in the beginning, we need to spend some screen time. It's because the next time when you start to trade or when you start to invest, then your eyes will be much, much quicker to spot all these opportunities. I mean, it might be difficult in the beginning, but after some time, you get used to it. It's like driving a car, right? So in the beginning, you get a bit uncomfortable, panic. And one day, when you're driving a car, you can even drive it with using one hand. Because first you start with two hands, right? And if you shift gears, then you're a little bit unsure here and there, and then you look at mirrors and all that. Going to the highway is also very scary. But now you can drive your car with one hand, even in the highway. All right, so it's the same as trading. So you don't get very comfortable in the beginning because you might think it's overwhelming at the beginning, but after you have actually get used to all these patterns, then you start to pick up these things easily when you look at the chart. All right, again, yeah, inverted hammer. All right, so this is where I bought this stock near December 2018. All right, okay, this is January right here, right? This is almost at year end, and I get to buy the stock about 125. So almost at the bottom, right? So this is actually a very nice double bottom, and there's a temporary breakout here, a bear trap, which forms an inverted hammer. Then the next day it gaps up. Uh, the bulls are very committed and they're in control. Then the price starts to go upwards after that. Right. So this is on Alibaba, and this is actually a three white soldier, or we call it advancing three white soldier. So this is where we start to see it continue. But unfortunately, after a huge sell-off, then there's this government regulation. Alibaba keeps, after some consolidation right here, keeps selling downwards, even below the moving averages right now. So it has been almost from this November to August, up to August now. It's about more than 9 months. It's around 9 months since going down from this top right here. So I'm still holding on to this and buying more. And fundamentals are doing great, so not going to worry that much. It's going to go up again. Okay, now more on this. I always like I said earlier. Then these kind of candles, it really depends where it appears in the chart. So you can see that this has been Before it forms this bullish pin bar, it was actually a red or a black, okay, let's say a bearish candle right here before it gets rejected upwards. And this causes a lot of panic and also invites a lot of short sellers to come in. Right, sellers come in right here and they will actually trap here when the buyers buy and it closes way above here and they start to sell around this area, right, hitting their stop loss. Okay, and the same here, there's a bear trap right here. It was once a bearish red candle. Okay, so more of that. Um, so this is also another strong stock, Mastercard, and this is after a huge sell-off. Then you can see some support is forming. Then we can see one white soldier right here. All right, so there's some rejection right here. Then you can see long-legged doji for this one, and then the trend starts to continue upwards, small candle upwards. Then for the chart to be, I mean, for the stock to be looking bullish, it has to be small green bullish candles. Then you have suddenly have red candles, huge, to shake out the hands before it starts to continue to go up again. All right, so okay, Johnson Johnson, one of my favorite stock, defensive stock, and all right, this is actually a quite, I would say, after you've traded some time, after a huge sell-off, there's some volatility. All right, so indecision. Then a lot of people say that this is the symmetrical triangle, and it start continue going downwards even further, right? But this is where I would call, okay, if I draw this line properly, right, you can see a symmetrical triangle. And this is where a lot of people think that this will start to go down even further. It's a continuation pattern. This pattern is a bearish continuation pattern, right? Continuation pattern. And a lot of people think that it goes down further. Then it actually starts to reverse here because a lot of smart money is buying around this area. So you can see that the price starts to go the opposite direction, and this is where a short squeeze happens. A lot of people know that when the price comes up here, the short sellers knows they are wrong, then they buy, they buy to cover their short position right here. So they panic, all right, panic buying, and it causes huge impulsive candle right here. All right, so sorry, I haven't said that. This is actually bullish engulfing candle, right? Okay, hammer, very common. Don't have to go into this all the time. Okay, 40 net. Okay, now you can see that most of the time when you have huge sell-off like this, and you start seeing some, okay, this is bullish breakaway, quite rare. And a lot of people think, okay, here's the reversal, then they buy, and you have smart money shaking them out again. So then it forms a hammer right here. Then also they get shaken out, forming even lower lows. Then this is a final shakeout, and it forms a bullish kicker right here. Then it starts to trend up again, small candles going upwards, then the huge red candle going downwards and sharper degree, right? Sharper angle. So this is where it forms another bullish candle or hammer, then continues shaking out, then coming back up again and forming even more bullish hammer. Then finally, before the price surges upwards, and this is where we can draw a very significant resistance line. And finally, after this double Marubozu is a final accumulation before it sends the price upwards. Right. Okay. So this is a very I can remember this is actually during pandemic, and this is a weekly candle, and there was a huge panic right here. Huge panic forms a huge bear trap right here, and a huge rejection, and it forms a hammer. This is a hammer right here before it starts to go up. Right. So this is very obvious, right? Okay. Well, McDonald's again. Well, this is okay. This is way back before 2004, and so there's been huge sell-off. I think this is from the tech bubble. Huge sell-off after financial crisis. Then you can see multiple of these patterns happening. The three line strikes. Uh, it forms. See, you can see some combinations right here: hammer, hammer, hammer. Then a lot of people start to see hammer, they buy it, right? Then it was forced down even further to shake them out. And when you see all these patterns happening, and it happens for even like a few months, see September to March. And if you buy in here, then and if this is a strong stock, it doesn't matter. If it goes down, it doesn't go down forever. So it starts to recover again. And this is where this is a very strong resistance. Then that's where it breaks out and it starts to continue to go up. Now, always, even if we trade with this kind of candles, remember, always trade it with a fundamentally strong stock. All right, that's my based on my experience. It is always higher probability to do that. All right, Nextera Energy. Well, great combinations. You can always see this kind of candles happening right here. Bear trap, then comes down and tests, forms a support, comes down and tests again. So this is actually in weekly. These candles are weekly candles, right? So, well, hammer is quite common, so don't have to go too deep into that, right? Three line strike, just an example. Three line strikes, again, three line strikes here. Also, again, three line strikes, and okay, now three line strikes. You can see that there's this pattern right here. We always call it rounding bottom, and this is where a lot of people think that it's breaking out, and this is like a final shakeout, right? Before it starts to go, I mean, it starts to go up further, right? Then grab up, three line strike. Okay, this is in S&P, and you'll be very often you can see this in especially the index. You could see this in the index most of the time. All right, so now continuation pattern. Okay, now so this is actually rising tree method, but you can see that once this has happened, it doesn't actually go up. You can see that goes down. See, it doesn't happen all the time, right? To go up. But always remember, even if these patterns they don't go up immediately, if you are actually holding on to strong stocks, then at the end of the day it still goes up. All right. But this is just to say that there's a pattern right here, which tells us that this is a rising tree method. Not my favorite pattern, right? So again, this is a very rare. I couldn't find it anywhere in the chart, and then I found it in this penny stock chart. Grow capital. So concealing baby swallow. Hard to remember even. But doesn't really matter. If you miss out this one, you don't remember, doesn't really matter. All right. Not very common. So rising tree method. Again, now this is Amazon, one of the strong stocks. And this is where it's actually giving us a very good, presenting a very good opportunity. So after it gaps up, and this is what we call a runaway gap. This could be caused by earnings announcement that gaps up. Then price rests for a while. A lot of people takes profit because of the huge long gap. Probably they bought it before, earlier. They bought it earlier, and these candles are all within around this range of this candle. You can see, all right, around that range, not exactly in the range, around the range. Then that's next. The bullish candle closes, you know, almost okay. It closes above this candle right here. Then it starts to continue the trend. Right here, again, EPAM rising tree method, price resting, then yeah, bulls coming in, and this is closing above this candle right here. Then it starts to go upwards. All right, we couldn't find perfectly that this will actually look 100% the same as this one, but as long as it looks similar, right, there's not gonna be 100% same. And and it could be more than three candles. If you look at Google, and it has been like resting for how long? One, two, three, four, five, six, seven, eight. 8 days before you start to see another rally. But a lot of people they will call this a bullish flag instead. Then here's the breakout. All right, bullish flag breakout. Rising tree method. Sounds fancy. Again, okay, bullish mat. It's also like a rising flag. All right, bullish flag. Right, quite rare. Amazon. Again, this is can be found after a gap up. See, this dot right here means that there's an earnings announcement. Wham! Then a lot of people take profit. Then as price goes up a little bit, then a lot of people start to take profit before the. And this is like reaccumulation. All right, this is a rectangle pattern. Then it starts to break out here and it starts to move sharply upwards. Right, a lot of chart patterns to see. Bullish mat hole. All right, upside Tasuki gap. And wow, okay, this is quite, I wouldn't say rare or whatever, but it's not really something that I always get to spot. Right, and this is something like it started to rally quite a lot, rest here, rally, and then okay, this is where it gaps from here, not a huge gap, gaps from here. Then you can see this candle right here, profit taking candle. Then see right out of profit taking, then it starts to rally again sharply. Right, so this is in trending chart. Well, gaps up a little bit, gaps up here, right here. This is where the gaps up. There's a gap right here, profit taking, and this is also right from the bear trap where it's actually a continuing going upwards. So profit taking, then after that some consolidation again, then it goes up. Runaway gaps right here. Okay, wow. All right, this is also again because of earnings gap up. Then a lot of people they start to take profit right here. Okay, then after that some huge consolidation because this is sharp, right? And this is like a more reaccumulations from smart money before. Again, the next earning gaps up, profit taking, then starts to go upwards from there. Strong stocks doesn't really consolidate for more than maybe not more than a year for this one. All right, so it happens half a year consolidation, 9 months before it continues the trend. All right, so that's all I want to share. Don't want to overwhelm you with too many combinations, too many patterns. But I hope you enjoy this video and thank you for your time. Striker X here signing out.